Hey Andrew, what's happening, my man?
Hey, Joe. Good to see you, man. Thanks for having me out tonight or in tonight, I guess, however you
Yeah,
want to word it.
new world. This is going out. I mean, I guess you're allowed to actually physically go out, but this is how we are, right? Zoom meetings and stuff like that.
Yep. Yep. Living on the phone, living on the internet conference calls.
That's right. So Andrew Ceo, spelled CEO, and that may come up later. We'll see. But an insurance agent extraordinaire. Um, I know
Thank
for
you.
sure handling life insurance and automobile and homeowners insurance, and you can tell us a little bit more about that. I guess let's know a little bit about Andrew. I mean, what I'm a realtor, and not a lot of people graduate high school or college and say, I'm going to be a realtor. Some do.
Hmm.
There's a good
Yeah.
portion, but we kind of joke that it's like a secondary career. So once we kind of know what you're drinking on Brokers and Brews, then I want to know
Okay.
a little bit about what gets a guy or woman into insurance because it doesn't seem like
Absolutely.
a natural thing from college. So let's go.
Well, I mean, I dressed up from fourth through eighth grade as an insurance agent for Halloween, so I'm probably above the
Obviously.
norm. No, that's absolutely not true. Let me answer your first question. Tonight, I am drinking Go Juice.
Nice.
It's Shorts Brew. My wife bought me a six pack probably 6, 8 months ago, and that kind of turned into one of my favorites over the last 6 to 8 months. So that's what I'm drinking, at least the first pour for tonight. And then as far as how I got into insurance, so I was at Michigan State studying economics, so that's what
Obviously,
I
I
graduated with.
sorry, this is the down part of the Zoom meetings is like interruptions and stuff, the natural conversation flow. But clearly, anybody watching that sees a basketball, football helmet, I don't know what that is in the upper right corner.
I think my wife did some like glass art, so that's
Okay,
what is right here.
yeah,
She's very talented in many ways. This is just some grab bag basket and God knows what else.
yeah. So graduated Michigan
So,
State. Sorry.
yep. And actually, simultaneous to my senior year, I started studying for insurance licensing. So, actually, at the MSU business, conference and whatnot, there were many vendors there, and that's when I first got plugged into insurance. So, a little bit more on the financial and insurance aspect of things, but I had some of those exams knocked out upon graduation, and I started at 21 years old in this field, and I've had a couple stops along the way, but now I'm heading into my 15th year of insurance, and so yeah, it's been good to me, and I think I've done some good along the way, and oddly enough, probably the same sick mind that enjoys economics probably enjoys insurance, so it's probably good for me and good for my clients.
Awesome. So,
And hey, whoa, I have to interrupt. What are you drinking?
I was gonna say, by the way, because I feel like somehow I missed this. So you may or may not know if you follow me on social media. I've been doing keto for almost 2 months now. So I saw the commercial, St. Archer's Gold. I don't know if how that's
Okay,
there.
I've seen those too. I have not tried one.
95 calories, which I don't really care as much about the calories, 2.6 grams of carbs. It's
Okay.
only 4.2% alcohol. So that's the downside.
Mm-hmm.
A normal beer is at least five, and then you start going up from there. Um, but this tastes pretty good. Uh,
Good.
Nothing against Michelob Ultra. I've drank plenty of them, especially if
Mm-hmm.
I'm doing low carb. But I think this one's better. So that's my one of my go tos these days.
That's excellent.
Yeah, so it's good stuff.
Well,
So
you're a better man than I. I've done keto, and then usually I break stride by lunch, and then I try again the next day.
it's tricky, and the one thing about keto that a lot of people may not really understand is that you don't get cheat days. So
Hmm.
if you know a lot about working out diets and things like that, you know that a lot of times people will talk about cheat day. If you follow The Rock, who's
Mm,
incredibly inspirational and fun to watch on social media, his Sunday cheat days are
epic,
awesome. Yeah, I
epic.
mean, his French toast is like that thick. It's got peanut butter, and now he's mixing in some of his tequila and stuff. And it's
Hmm.
fantastic. You don't get that in keto because, of course, if you cheat it, you get out of ketosis, which means you're not burning the fat that you're taking in anymore. which means now you're just getting fat. So
Yep.
that's the hard part. But the easy part is you kind of know what to do, and you just either do it or you don't. And if you don't, then you
Yep.
better get into something else, because a high fat diet with a bunch of carbs is not a good mixture.
Yes. Amen. Well, it looks like you're doing great on that, man. Keep it up.
Yeah, so far 10 or 11 pounds at least. And, I'm obviously doing some workouts and whatever, but I'm just saying, for me, a diet that I can follow, it just keeps me in line. When
Mhm.
I try to eat healthy, I do, but then when I give the kids a handful of Doritos, then I might grab a handful and say, well, it's just a handful, but I forgot that I
Guilty.
also had two cookies and I had something else. And so it's like, yeah, it is just a handful on top of all the other crap that I put into my body. So
Oh yeah, it's easy. Mindless for
yeah,
sure.
it is. And especially when you do one little thing at a time. So you grab like one Oreo at lunch, like it's just an Oreo, it's cool. But then you grab one at 3 and you grab one after dinner. And then of course the kids had Oreos, so I had to have one then. So I've had four. And you start looking at that and you're like, well, that was an extra 300 calories, or something.
Hmm.
So
Sounds like you have cameras in my house because that describes me very well.
so yeah, so that's kind of my thing. And so when I do this, it's very easy for me to forego certain stuff, because I know that I can't. And so I don't
Mhm.
know. We all got to find our certain mental place, and that's the one that
Yep.
seems to work for me. And then I think it's if you do keto the right way, it's actually pretty healthy because
Good.
you are taking in fats, but you take in plenty of vegetables, especially green veggies. And it's not eat bacon wrapped hot dogs. It's like
Hmm.
I know a lot of people think it is, but that is not the basis of the diet. So it actually can be pretty good, pretty healthy, pretty fun, and anything that I can still drink a little bit is helpful.
Amen. Yeah, you got to have a little vice here and there. So not
So
not a Sunday rock cheat meal, but still a nice little outlet.
yeah, and trust me, if I could be The Rock and I could have his cheat meals, I absolutely would.
Amen, brother.
Not to say I can't, but it's certainly not in my plans anytime soon or so. So insurance agent, and we obviously kind of know each other because you wrote a policy for me.
Hmm.
So I feel like there's so much to talk about because we're in Michigan and
Hmm.
a lot of headlines about auto insurance. But before we even go there, I'm very curious. Life insurance. Have
Yep.
policies changed? Have they become easier or more strict to get? All
Yeah.
since say, oh, I don't know, March.
No, you're absolutely right. So great question. I will say before COVID, right, there was a push in the life insurance industry to get a little bit more streamlined. You and I know there's tons of data out there, right? So the old school way of doing life insurance is pee in a cup, get height, weight, blood pressure, have that examiner come out the house. Plus, they pull attending physician statements, basically doctor's notes, and do questionnaires, and they compile it all together. And here's what your rating is. Before COVID, a lot of carriers had already made headway, maybe at smaller benefit amounts, but already made headway on some automation. So, hey, Joe Muck wants a life insurance policy. We might have 4 to 5 thousand data points out there, right? What's he buying at the grocery store? Or how many times a week is he going to McDonald's? How many times is he going to the cigar shop versus going to the gym, right? So they can use a lot of those things as well as credit type scoring and compile in for not everyone, but kind of maybe under 40 or under 50-year olds within a certain age and health bracket, some of those data points and make an automatic offer. So that was kind of coming about before COVID, as you alluded to in March, came around. But I will say that some carriers kind of paused writing for certain age groups or certain health levels, usually those lower health levels. Um, some carriers actually upped the ante and said, hey, we're going to increase the benefit amount that we will allow, but we're going to require that everyone sign off that you do not have COVID, you haven't had COVID, you're not self quarantining, you don't have symptoms, you're not waiting for results. So a lot of it was the affidavits and sign off saying you haven't been exposed to the best of your knowledge, and there's still a lot of life insurance being written out there. So hopefully that answers your question. It definitely hasn't shut down the business. It does, I don't know of a carrier that said we're not taking new policy holders, but there's a lot of carriers that say we're going to maybe change the way we do it. Some for the better, some a little bit more restrictive or for the worse. But I will say that's tailed off a little bit. Of course, we're maybe heading into a little second wave, or a continuation of this first wave, however you want to look at it.
Sure.
So we'll see if things change again.
And what about, I mean, like when we did ours, I did have the in-home visit. Um, was I mean, I have to imagine that there was some change there or hesitancy at the beginning. Maybe it's gotten better, maybe it hasn't. Um, so how did the company that's giving the policy, how have they gone about getting that done lately?
Yeah. So I mean, there are some people that I'd say were in the process of getting life insurance that maybe postponed getting the exam. There were also, I'd say, a shortage of examiners that were comfortable going into somebody's home. So there were some of those natural delays, and so different underwriting departments maybe allowed for somebody to have a life app, just kind of in transition for a longer period of time. Usually, you've got to kind of stay the process and knock that out in maybe 30 to 60 days, but they allowed for people to leave that application active and then maybe activate on it in later months because they knew of some of the financial delays or health concern delays. But yeah, I'd say policies were still written, for sure. And then I think there were some natural, hey, let's revisit this after the fact, both for, hey, budgetary concerns, but also, not inviting strangers in their house to, make them pee in a cup or take blood. So
Right.
a lot of people did things to reduce exposure, which was
Yeah.
not a bad decision by any means.
Well, and that was certainly my case, right? I mean, I was like, yeah, I'm really interested in this, and you gave me some different options and breakdowns, and I think that's a really big thing that people need to understand, whether they're using you or anybody else, is really understanding what your policy is or why your policy is.
Hmm.
Excuse me, as I'm 39, and I had a different policy that I got at 32 or 33, maybe even younger. I don't know, 28, somewhere in there. And so I have different premiums now, but
Hmm.
life insurance is a really tough thing from a consumer standpoint because you sit here and say, well, I know that if I did die, my family could use X dollars, whether it's 10,000 or 10 million, right?
Hmm.
Um, but I don't plan on dying, and
Hmm.
I go to the gym and I'm doing, ketogenic diets and, like stuff like that, right? So you're going like, I should be okay. But like, that's not why you're ever getting the policy. At the same time, you say, okay, I'm pretty healthy and it costs X dollars um, a year or a month or whatever. I don't know if it's worth it, and it's like, it's only
Hmm.
a few hundred, and few meaning three, six, something under 1,000 for
Yep.
the policy. And so it's kind of tricky, but that was certainly my case where I was like, all right, cool, let's think about doing this. And then you give me all the numbers and I have the person in the house. And then all of a sudden I'm like, yeah, man, we're not doing anything right now that we don't have to
Yep.
financially, pump the brakes. Don't know, how many houses am I going to sell when this goes on or we get out of it or whatever. Don't know if my wife, as a nurse practitioner, is going to have a job. So not dropping a
Yeah.
few $100. I already have a policy, and if I die, that's going to have to suffice. So,
Yeah.
but obviously things got a little better, and so we got the policy together. But like, I guess from an insurance agent standpoint,
Hmm.
outside of the sale, because I think at the end of the day, it's not about the sale; it's about helping people. Like,
Amen.
why on earth should a 39-year-old relatively healthy guy who already has a policy uh, think about
Hmm.
getting another policy? How does that make
Yeah.
sense?
Absolutely. Well, if I were to get back into the files and get back into the nitty gritty with you, I would probably venture to guess that when you got that policy when you're 28 or 32 years old, you know maybe you didn't have so many demands on you or so many financial responsibilities, right? So I look in your background and I see a picture of a wife and then some kids, and right, you have a house, and so when you were 28 or 32, the financial obligations you had probably weren't as great, right? So as we get older, as we bring others into our fold, we have a promise to them, spoken or unspoken, right? So we want to fulfill that. So getting something in place early is always great. Some people will buy life insurance up to 6 or 7 different times throughout the years as needs change. So why someone would consider it? Because they have a financial promise to somebody, and the pain of not having that in place probably far outweighs the pain of, let's say, a couple $100 a year or even $1,000 a year in premium. And these are the conversations I have with people all the time, right? And it's a real world conversation. I don't want to be the guy that takes away, pizza on Friday nights or trips up to, Zender's water park or Disney World, well, when those things are open.
Right.
But at the same time, I care about the people that you care about. And so, in a lot of instances, life insurance makes sense to fill that role that Joe fills financially. I can never replace a Joe, but hopefully we can, with pennies on the dollar, fill what financial gifts you bring into the household on a monthly or annual basis, so that even if I'm not here as a parent, the kids still will go to the colleges I want them to, or live the lifestyle they want to, or go to the schools or play the sports that I want them to, at least be able to do if they want. So, it's a delicate dance, right? No one loves paying for life insurance, and you and I, as let's say the insureds, will never see the benefit of it. But hopefully, if whoever's a believer, we think that, hey, if that happens, that worst day comes, and I'm looking down from heaven, I know that my family is living the best life they possibly can in my absence.
Yeah.
So,
Well,
you know,
and clearly freak accidents happen and those types of things,
oh
and
yeah,
car accidents obviously happen quite regularly.
yep,
Um, but I think for me, I mean, that was what happened with myself and my wife. We both got insurance policies after our first son was born,
hmm,
and that's why I feel like I got it at like 28 or 29. But it could have been a couple of years later just because of finances. I don't know, but I feel like we did right away because we said, well, there's this extra life to be accounted for. And, should one of us not be here, the other person might struggle to maintain a certain quality of life and have college
exactly,
and those types of things. Uh, we're both fortunate. We have good jobs. We make reasonable financial decisions, things like that. And so to take one of those things away, the other person would still make more than the average income in the country, but it would significantly change our lifestyle, significantly
oh yeah,
change our ability to live in the house that we live in, drive the car that we drive. We don't have anything. We have two Fords. We don't have like a couple of Bentleys outside or anything, but drive the cars that we drive, and then pay for the sports and pay for the this and pay for the that. Even little things that happen on the day to day. If you're strapped, for cash, the ice cream man's like $2 these days. Maybe three or four.
hmm,
Depending on what ice cream they want. And so I said for sure I did not want to leave this earth, with also leaving debt. So I wanted to make
yep,
sure we could at least pay off like the mortgage at a minimum. You know,
yep,
and then, like you said, basically the purpose of my increased secondary policy now is okay. Well, I want to also make sure that there's some college money, um, some money to cover the funeral, some money to pay off basically all existing debts that are kind of here.
yeah,
College not being one of them because we don't know what that's going to actually cost, but
hmm,
pay off existing debts and have some cash to put into the college fund so that the
yep.
other provider can continue providing debt free. That's a lot easier,
Well,
So
exactly. Yeah, I think the worst story you can hear is I lost a parent, but essentially they lost two parents because now that single parent has to go get a third or a fourth job, right?
Mhm.
Or now you've got to move out of that house you can't afford anymore and maybe move those kids into a different school district, right? So now you're changing the teams they play on, the friends they hang out with, the neighborhoods they're used to, on top of the fact that they lost one of the most important figures in their life, right? It just compounds that pain and agony. So again, if we can, as you've done, take away a lot of that financial stress and strain, I mean, I'd say the best scenario, the best story that someone can tell is, other than losing my parent or loved one, life went on the same. I mean, it sounds morbid, but that's probably the best case scenario, is that we didn't miss a house payment. We didn't have to move, right? We didn't have to eat ramen when we were used to eating steak, right? We didn't have to, I don't know, change the backyard sandlot when we were used to playing travel ball. So all of those things, you're doing what you would have done if you were on Earth. And so, no, it's a good, responsible thing that you've done, that I've done, that a lot of our clients have, pursued to do. And it's just understanding it. And you're absolutely right. It can be complicated. There's a lot of different options out there, but probably just like our house, right? There's a lot of options so that you can find the exact right fit for your needs, whether it's a 8,000 square foot house or a $10 million life insurance policy or a starter, right? Like when
Right.
you're 28, so a lot of parallels for sure.
And
And budget's always a concern.
for sure. So to that point, say I don't have, say I'm making a living. I'm a nurse. I'm a teacher. I'm a police officer, fireman, something like that. So a reasonable income, but you're certainly not going to tip the 1% scale or anything anytime
Hmm.
soon. Do we have a policy that I can buy from a person like yourself that maybe is only at least enough to cover the funeral expenses?
Oh,
And
for sure.
okay,
Yeah. So I mean, in short, there are what you would call a final expense policy, right? Something in that $15,000 to $30,000 range, depending on how much you want to put in place, that is strictly for that purpose.
mhm,
Oftentimes, the clients that I'm talking to are, in their 30s, 40s, and 50s, and maybe want to do a little bit more for, again, those people in their life. So we're often talking about, and maybe it's a very short term policy. They exist in 10 and 20-year or 15-year type term policies, as well as much longer. But that gives you an opportunity to not be out too much, maybe even reduce the benefit or face amount, as they would call it, to something in the 100,000 or $150,000 range. And while that's a good chunk of change to many, when we're looking at premiums, I mean, we've written policies as low as $11 to $14 a month. So, most people can probably find that kind of extra money, whether it's buying a couple less energy drinks or buying one less six pack of micro brews a month. Most people can find that money, and then it's just prioritizing, right? Instead of me stopping at the convenience store and grabbing a pop every day or every other day, if I can put that into something that will make an impact, or at least buy some time for my loved ones to get on their own 2 feet if I leave, that's probably a win. So, when I think most people overestimate life insurance premiums by about 4 or 5 times. So, when you really sit down with someone and digest it, it's much more affordable than people realize.
yeah, and you're right. And if I didn't have the initial policy, there was a no-brainer back in February when you first gave me the numbers, right? But because I had one, we had to find the right balance, and that
Hmm.
was something that I'm going to just come back to how important it really was to have yourself and minimally somebody like yourself who could say, well, you don't have to do another 30-year term policy. Here's, excuse me, here's some options,
Hmm.
10-year, here's a 20-year, here's a 30-year, and here's some price points that you can get for those terms and how much they are to have those price points. So if you really do feel like we only need to get you through to 60 for now, and then at 60 you could evaluate a different policy. And this was,
Hmm.
I mean, and I've been very fortunate to work with good insurance agents throughout my adulthood. Um,
Excellent.
and so, but it was the first time that somebody really explained it to me, and I'm sure some of it was my age, when you said, well, when you're 60, hopefully your financial implications are lower, right? Because my kids are 8 and 11. I'm not quite 40. So if
Hmm.
we go up 20 years to now 31 and 28, hopefully I'm not paying for college. Hopefully I'm not paying for their food. Hopefully I'm not
Hmm.
paying for, right? So their expense is gone. And anybody who has kids, I don't care how rich or poor you are, knows how expensive they are.
Yep.
And so if that expense is gone, maybe the mortgage is paid off. If it's not, hopefully because we downsized, so the mortgage is less. You know,
Hmm.
all these things. Gas maybe is less because you're not driving as much for work. I mean, you're certainly
Oh
not.
yeah.
All those things changed. He said, well, you don't need the same life insurance policy now. Now you need something to help kind of finish up some maybe a couple things, pay for the
Yeah.
funeral, and it was like, so yes, at 60, your life insurance premiums are higher, but you don't need the X dollars that you think that you need today. You need a
Yep.
different dollar amount. And so it's going to help offset. And I was like, huh, that makes a
Mhm.
ton of sense. Thank you very much.
Absolutely. Well, and I'll probably screw it up, but if we had a little access, right? Your debts and dependencies and mortgage, right, should slowly go down, and hopefully, if you and the wife are successful, the income and savings and investments and interest rates will go up. And so, yeah, that inverse relationship leads exactly to what you said and what we obviously talked about months ago, which is what you need today will differ than from what you need 10 years from now or 20 years from now or 30 years from now. And
Right.
again, there's no cookie cutter, this is what every person should do in your age bracket.
Hmm.
I think anyone who tries to shove someone in a box and say, this is what you should do, should walk the other way, or the prospect or client should walk the other way. It's really, what do you want to achieve with it? What can you afford? What do you truly believe? And what will help satisfy that? And some people just say, hey, my kids will have to fend for themselves. I fend for myself, and I'm not interested in gifting them anything upon my passing. And it's just a rite of passage, and I don't think I can change that person. So then that's what's right for them.
Yeah. Uh, well, it's funny too because when you really start to think about like your finances and what they look like, what they could look like, you kind of you alluded to it earlier, like you could find the money that you need to make sure that your family is taken care of, you know.
Hmm.
And I just look at it, if you have kids, obviously everyone has a different relationship with a spouse or partner or what have you, and maybe it's a former, right? And so maybe you're not
Hmm.
worried about that person, but if you have kids, I just think, I just feel like as a parent, I just owe it to them that if something unfortunate and tragic does happen, um, that they have some sort of opportunity, and maybe even an extra opportunity, because the fact of the
Hmm.
matter is like, uh, I'm selling a lot of houses, but I probably am worth more dead than I am alive right now. Okay.
Yeah, be careful who you share that with, spouses included.
Yeah, well, hopefully we're sharing it with the world. Uh,
Yeah.
let's make it go viral. But I mean, seriously, like one payout is going to be more than I'm going to make this year. It's
Hmm.
but the purpose of it, and that's why one reason it's called life insurance is because it's to help cover my lifetime. So it's not
Exactly.
more than I'm going to make for the next 20 years. That's for sure. Um,
Hmm.
but anyways, enough about this literal morbid topic. Um, so in Michigan, we had a big change, maybe, and it's on the news and it's in your Facebook and it's all over the place. And I definitely talked to my uh, auto insurance agent and said like, what do I need to do? And they're like, well, what do you want to do? And I'm like, I don't know. I don't really know. I don't know what we're doing. And so they broke it down. We had a long conversation, and you know,
Excellent.
uh, and I've got the time if you do, but I'm guessing you don't. Um, I mean, like, what what the heck just happened? And for anyone who's unfamiliar, even if you're in Michigan, we have
Yeah.
no fault in Michigan, which
Hmm.
means ultimately it's supposed to be nobody's fault. And so, correct me if I'm wrong. Really, where that comes down is your insurance pays for you, my insurance pays for me. And in theory, it's supposed to be that way, but there's all these other loopholes to that,
Yep.
injury and liability, and then also help me with the term. Um,
Probably personal injury protection or medical or
no, there's
un and underinsured,
what's the term that like I can always go after you, even if it is,
mini tort.
yes, there you go.
Okay.
I've got that too, that thing, that whole thing. And
Yep.
so it's like no fault still isn't really no fault. There's still issues with it. But like,
Yes.
what in the world changed that on July 1st here?
Yep. So I always like to simplify. No fault has been, and no fault for the most part will continue to be. You're responsible for your vehicle. I'm responsible for my vehicle, right? So you get to elect on yours if and what you want for comprehensive deductible. So that's glass breakage, fire theft, vandalism, if you hit a deer, that kind of stuff, or what you want for your deductible on a collision, which is just that, or if you want PLPD, which is no physical damage coverage. So really, no fault has kept lawsuits out of the courtroom for me suing you to fix my metal and you suing me to fix your metal. That's
Now,
how I
in other state,
simplify it.
maybe not all 49 other states, but in other states,
Yep.
you can do that, right? So I hit you, I ruined your Range Rover. You don't drive a Range
Yep.
Rover,
No.
and and you get to say, hey, it's $25,000 to fix this
Yep.
Range Rover, and so you can sue me to pay for your damage. In
Yeah.
some of our other states, correct?
Some of the other states have components of no fault insurance, and then you're right. There are some that have looser parameters on what we can sue each other for as it comes to physical damage of the vehicle.
Okay,
So, yep, you're absolutely right. I will speak to Michigan because that's where I am primarily licensed and do our business. So, yeah, no fault in our state is basically just think about that physical damage portion of things. Now, obviously, there's a mini tort situation where if you rear end my vehicle and I'm out of some deductible money, I could get some back, but that's usually quite minor. It used to be, 500 to $1,000. I think now it's raised to $3,000. So it's still insufficient to, replace or fix any significant vehicle. So that's why we all do our own part on our own policy to maintain the deductible that we're comfortable with for the physical damage portion of things.
okay,
So now, as far as all the other stuff, right? All the liability and personal injury protection and the MCCA charges, all of those things have been affected come July 1st. But I'll try to simplify it and truncate it so this isn't a 5 hour conversation. So I think the first one that is pretty automatic once someone renews or writes a new policy after July of this year is the reduction in MCCA. So that's that Michigan Catastrophic Claims Association fund. So that was around $220, $230 per vehicle per year, automatically taken no matter what carrier we're with. It doesn't go to the carrier, it goes straight to the state fund. That has now been reduced to $100 per vehicle per year. So, about $130 per vehicle of savings. So that's, let's say, $260 off the top in your household as soon as someone writes a new policy or renews after July. So that's good. That number can further be reduced to even zero depending on what people's decisions are when it comes to personal injury protection. So that's that second choice, and what the governor really wanted to roll out to give people not only choice but additional savings options. So this is where we've always had unlimited medical. So as far as that not no fault component was the fact that we couldn't sue each other for medical bills because you maintained unlimited on yours and I maintained unlimited on mine. Now, as of July 1st, we now have choice. So we can maintain unlimited. We can choose a $500,000 medical option, a $250,000 medical option, or if someone's on Medicare or Medicaid, they can further reduce it or completely opt out. Probably like anything in the world, there's pros and cons of those decisions, right?
sure.
So, so obviously with those decisions, if someone lowers those limits, there's potentially additional savings. So options and savings was really what the headlines read over the last year since this bill was initially signed last summer. And so I think there was a lot of excitement about the droves of savings. There's some savings involved, but not as much, I think, as people initially thought. I think the thought was, hey, I'm going to save 50% of my auto insurance, where the more realistic story is you can save up to 50% on certain categories within it. So
Hmm.
I give the analogy of you're not saving 50% on your entire wardrobe, Joe, but I can save you 50% on your pants,
Sure,
if that makes sense. So,
sure.
so some good things, some choices, but a lot of confusion that goes along with that. Then there's a lot of other things that are kind of behind the scenes that you either won't realize until you kind of get the medical bills. So that kind of alludes to kind of the reimbursement schedule. So auto insurance was this open checkbook with no bureau auditing, how much abuse was going on, and the fact that, doctors could get reimbursed 2 to 3 times more if it was billed against auto insurance than if it was billed against major medical or workers' comp. So, of course, that might shift some people's billing tactics. So that's getting reined in come next year, which is good. Some things that won't be realized until there's actually an accident is who is covered. So it used to be, hey, anyone in your car driving your vehicle that you toss the keys to would be covered under your policy. But now they have what's called an order of priority, meaning instead of everyone under the sun, essentially, now it's limited to, hey, are you a driver? Are you an insured? Are you a resident relative? And if not, then the medical coverage goes to whatever that person's policy is. Or if they don't have a policy, it would then go to the state claims association with a maximum of 250,000 of medical coverage. So, those are probably the biggest factors that are involved with auto reform. And really, just as you did, it's advisable to talk to your agent or talk to a couple different agents, or get some options. But by all means, don't just say, drag the price tool all the way to the bottom and save me as much money as possible, because people are going to find pain when there's real need, right? When they do have a claim. And that's one thing that is going to be interesting to see over the next year or the next 3 years is, okay, now that people have choice on how much medical they cover, if they get in an accident, someone else causes it, and that medical portion of their auto policy is insufficient, now you can sue that person for medical reimbursement. You used to not be able to. You used to be able to sue for like death, disfigurement, pain, anguish, loss of wages, those kind of things. But now you tie in a whole new category. And you and I know you spend a couple days in the ER with, drip lines and surgeries. That bill is going to be pretty hefty.
Sure.
So,
So, and I have some questions about that portion of things. But before we
mhm,
go down that path, okay, so we used to have unlimited, and now I can choose.
yep,
And I'm supposed to choose by going through my medical insurance
hmm,
policy and figuring out what they cover.
yep,
But where do I see where what the auto insurance covers? Because my belief is that the auto insurance policy on the medical side of things. So I'm in a car accident and I have medical needs, and I'm
yep,
using auto insurance to cover it. That there's way less limitations. Like I don't run into, well, you only get 20 rehab visits, or you
yep.
only get X of this or Y of that. And I mean, like, is it just basically it's always like unlimited, or where do you see that information? How do you really compare this apples to apples?
Yeah. So, I mean, you can always ask your carrier, your agent for the policy details, but you're absolutely right. The auto health insurance, and it's really more than just health insurance, but the auto personal injury protection category is super robust. And you hit the nail on the head. It's almost limitless. And it can go as far as attendant care, physical therapy, obviously in hospital needs, prescription drugs, concurrent surgery. So let's say you get in a car accident and you injure your knee. And because of that, you have a limp for 30 years. And because you have a limp, you cause strain on your hip and you need surgery on your hip 30 years later.
Hmm.
That concurrent surgery would be covered. Or, hey, I'm in a wheelchair. I now have to build ramps at my house. I have to widen doorways. I have to make for a zero entry shower. Those are all things that construction aspect would never be covered under a major medical, but that's covered under personal injury protection with an auto policy. So you're absolutely right. The auto policy is uncomparable. It's not just how many days in the doctor's office or ER, how much prescription drugs, how many chiropractic visits. And you're right. You need to, first of all, coordinate with your health insurance to see if they're primary or secondary. Then compare, all right, what's their schedule of benefits or explanation of benefits versus this unlimited, robust auto. And I mean, I think the short answer is I don't want any one of my friends or families or clients to be the first to test this water. So, if it's within budget, I would maintain unlimited. And you're talking about the difference of maybe 20 or $30 per individual per month.
Hmm.
So, if I could sell you a policy for, to call it $250 a year and say, Joe, you don't have to worry about a thing if you get in an auto accident, that's probably worth the premium. And
Yeah.
that's basically what can be built into or maintained in the auto insurance policies.
So and I personally agree. I guess I've been fortunate slash unfortunate enough that my mom had a stroke at 40, became diabetic at 50, got diverticulitis at 60. She had surgeries, ICU, long-term facility care, short-term facility care, in-home care, and
Yeah.
eventually another surgery, ICU. Passed away at 66. But I never personally was able to get those medical bills because I was not the person responsible for them. But I know what some of the stuff costs, and I
Oh
know
yeah.
when she had her stroke, for no pun intended, a stroke of luck, my dad's insurance kicked in because he had started a newer job on like July, say, 1st, and her stroke
Okay.
was like July 3rd or something crazy like that.
Wow.
I mean, we were literally days away from basically no coverage to coverage. And
Yep.
he had a really good policy through Health Alliance plan at the time that covered, pretty much everything she needed. But there was like a limitation. Now I think it was 100, but it was a limitation on uh, therapy visits. And the one
Hmm.
with their policy, maybe not specific at that moment, but over time, I remember one thing about that policy being it was therapy, physical therapy, speech pathologist, all those people. And when now, you're not going to have a stroke covered through auto insurance, but in this example, when you have a stroke, you normally have at least three therapists working with you because you have someone
Hmm.
helping you walk, someone helping you talk, and someone helping you swallow and eat and things like that. So those three different therapists, that's three. And if I see them all 4 times a week, that's 12. And so start dividing 100 into that, and you can see that you don't have a lot of coverage.
Yep.
Um, Now, fortunately, some of those eventually kind of should go away depending on the severity of the stroke. So you won't have a stroke if you're in a car accident, but you certainly could have the same reaction, right, from
Hmm.
traumatic brain injury or other things. So I'm
Yeah.
on board with the unlimited myself, um,
Hmm.
but I don't know that everybody is, and I certainly understand that many people probably do need to save the dollars. But again,
Hmm.
that's why I asked, like, where do I really compare these things apples to apples? Because I feel like insurance is such a tricky, hard thing to understand in the first place. Now we're all supposed to be able to pull out our two policies and hold them side by side and say, "This is what I want." It's not.
Yeah. I would say it's going to be hard to try to compare apples to apples or go line by line and say what is there. I do think that your health insurance policy, because of healthcare reform years ago, they have those explanations of benefits, so that's a little bit more explicitly detailed. But you're right on an auto. It's so robust and it's so open, which is good. But you're right, it's very hard to compare. So I guess at the end of the day, you're right. It's my job to educate somebody on the pros and cons, and then let them decide. But ultimately, it's, hey, if worst case scenario happened, right? You get in a severe car accident, and let's say your health insurance does fall short, right? You bleed through the visits, and you do all those things. Is 100,000 sufficient? Is 200,000 sufficient? Is how much of assets do we want to protect, and before we really potentially bankrupt that person or that family?
Yeah,
So, and some people are risk averse, some people are risk takers, some people only have to worry about themselves. And then you're right, there's some people, and we've had plenty of clients that have had that exact same conversation, which is, I need to save every dollar possible, right? They're living week to week, and that's all that they can do, and that's okay. And
hmm
maybe as time changes, and income and assets change, they can increase it. And hopefully, there wasn't anything severe that happened between the date of that change of the auto policy and maybe the increase of that auto policy. But I think it's like anything else, right? You're going to educate somebody on the different features and benefits of a house, and they're going to love it, but maybe can't afford it, or they're going to see the value in something and figure out some other ways to pay for it because they want that and need that in their life. So, again, a lot of parallels there.
yeah. Okay, and so now we've got myself figured out. I know what I want for me and people in my car.
Hmm.
Now we've got this other aspect of you because I hit
Yep.
you, or maybe
Yep.
even I hit you, and now you want me to cover my insurance to cover some of your medical expense. And
Yep.
you said it earlier that we weren't able to sue for something like that before, but now we can.
Yep.
But we have options again, don't we? We get to choose.
Absolutely.
Okay, so F that guy. I don't want to cover you. I want $0. So I'm good, right? I'm safe now. Is that
Essentially, so you can drive around illegally with $0, but now the new minimums, it used to be 2040, so 20,000 per incident, $40,000 total. Now it's increased to 50,000, 100,000, so 50,000 per individual, 100,000 aggregate, with the state recommendation of 250, 500,000. So if you choose less than that, you actually have to sign a waiver or affidavit saying, I know I'm under the state recommendation, but I'm still going to ride this way. So you're right. Someone says, I'm going as cheap as possible. I'm reducing, that coverage as much as possible. Both in the bodily injury and on an underinsured portion. Now you get into accident. The choice that you have to defend yourself and protect your assets is in that bodily injury category. That's that check that would go to others. So I want to sue you because I can't go to work or I can't enjoy life. I can't golf as good as I used to because I have this shoulder problem because of the car accident that you caused, Joe, and I want to sue you, right?
Mhm.
So whether that's for medical or it's just quality of life or disfigurement, something of that nature, your bodily injury category is what is going to cover. So oftentimes you'll see that in the $100,000 increments, oftentimes upwards of 500,000 or even a million. And then on top of that, for those that are, have assets worth protecting or income potential worth protecting, or just overall concern that now there's going to be a lot more medical lawsuits. Now you can tack on what's called an umbrella, which is just additional pure liability only policy. So, those are sold in $1 million increments. And again, that's a pretty big, sorry, my wife's looking at me creepily through the glass door in our office.
Okay.
She scares me sometimes. Anyway, those are sold in $1 million increments. And while that's a big dollar amount, you're probably talking $100 to $200 a year for that additional $1 million of liability on top of your base auto insurance policy.
So
So,
I'm asking this intentionally, like facetiously, but why do I want that? Why do I care about you? I care about
mhm,
me and my
yep.
family. So I signed the form. I took the lowest minimum possible. So you can only get the lowest minimum possible from me, right? Like that's why I signed it.
Great question. So the truth is no. So if I have I have 100, 300. So I've got $100,000, right?
Hmm.
And that's all that you can sue my insurance policy for. But anything that my policy is insufficient with, now you can come after me. And now you would do what's called an asset interrogatory. Your lawyer would come look at all my stuff, right? What equity do I have in my house? What money do I have in 401ks or SEPs or IRAs or 403bs or checking and savings accounts or bullion or whatever, right? Now you can sue me against that. And if that's insufficient, you can wage garnish me 25% for the rest of my life. So I'm in my 30s. I probably plan to work 30 more years. You can do some quick math. That's going to be a lot of coin out of my pocket if I'm giving you and your family 25% of my check every 2 weeks or every month. You know what I'm saying?
Yep.
So, you think you're doing yourself a favor or saying screw the other guy, but in the long run, you could be screwing yourself very badly.
Sure.
And realize too, and you probably do, you obviously have done a lot of research on this and had good conversations with your auto agent about it, but also by having a good bodily injury coverage, which is that check that would go to others, it also allows you to have a good what's called and underinsured coverage as well. And that's that check that, so if I hit you and I've got jack for coverage and I've got, jack for assets that you can sue against, or, I'm not the contributing member of society that, has is gainfully employed and you can't wage garnish me. Now your policy in that underinsured category would have the opportunity to pay you whatever that limit is. So again, it's all about protecting income and protecting assets, whether it's you need it or you need to get it in place to protect yourself against someone else's lawsuit.
So, and the last question about the new auto reform is,
Hmm.
I know what happens. Fortunately, I don't have to deal with mortgages because I know what happens.
Hmm.
You know, the Steele family gets a refinance, and you guys got 2.75 on a 30-year fixed. So I go, oh, I'm going to go get a refinance. I need 2.75 on a 30-year fixed. But I don't know your credit score. I don't know your debt to income ratio. I don't know if you paid points. I don't know if you got lender credits. I don't know. I don't know all those things. But I know that you got 2.75 because that's what you told me about. You
Yeah.
tell me you had an 800 credit score and you had a 20% debt to income ratio, and you didn't tell me all those things. You just said 2.75. So I
Yeah.
have to imagine that the same thing is occurring with the auto insurance right now, and it probably always has, but especially now. Well, Andrew's auto insurance went up $100 a month because of this reform. Is auto insurance really going up on average? Can it go up? What would cause it to go up? If I did no
Hmm.
changes to my policy, would I like
Yeah.
my policy renews in October? I didn't do
Okay.
anything. Would I likely get a new bill, bigger, higher, more expensive?
Yep. So earlier I joked that you had a camera in my house when we talked about Oreos and stuff. I feel like you have a camera in my office as well, Joe. I'm going to have to audit that. But you're absolutely right. My neighbor pays this. Why do I pay more? Right? And there's umpteen different variables from your age, your driving record, your claims history, the vehicles, the age. You know, all of those factors, as you alluded to, advantage scores, which are kind of like credit scores, discounts, alumni associations, safe driver stuff. There's umpteen different factors that play into algorithms for every carrier. And really, probably like a mortgage lender, until I run the numbers and get into your nitty gritty, I can't tell you what the premiums are going to be. But you're right. We have those questions happen all the time. To answer yours, in general, most often, premiums are going down. I would say there's probably about 20 to 30% of people that will benefit from staying out of the new auto reform rates as long as they can. So you alluded to you renew in October. So you've got a few months. There's about 20 or 30% of people that, because of the categories that they could get credits for before auto reform, that are now considered discriminatory, they actually are better off with the previous rating and discounts than they are in the new auto reform, where I would say the masses, say 70 to 80% of people, are going to be in a better boat once they jump into auto reform rates because, again, automatically a reduction in MCCA. Then you have other choices. Um, then there's some trickle down economics of to see how this pans out, right? Is there going to be an increase in claims? Is there going to be a decrease in medical payouts and reimbursements? Are there going to be more people that jump into auto insurance? I think if we look back at Obamacare and health insurance, right, there was the hope that there's 30 million people that don't have health insurance that now will jump in and contribute, which will feed the pool and reduce, loss ratios. Obviously, that didn't happen with the health insurance side of things. So the same curiosity exists with about 20% of Michiganders on whether or not they will, for the first time, get auto insurance. And that's one factor we didn't talk about, which doesn't come up too frequently. But if someone does not have prior insurance, they can now, for the first time, jump in with a standard carrier in this 18-month window and get auto insurance at basically a fair standard rate, where before they had to go to a high risk carrier for 6 months, pay basically their toll there, call it their penance, and then transition to a standard carrier. So we'll see, do more people pay in, how many maintain unlimited and contribute to that fund, how is that fund depleted, are there more lawsuits? um, yeah, it's a, in my economic brain, it's kind of fun to think about, but it's kind of a nightmare for many.
Yeah. Well, it's definitely. I mean, I think, like I said earlier, insurance in general is it's hard to understand. It's not like it's a one-page document that breaks it down.
Hmm.
Even if you get a synopsis, it's like 3 to 5 pages.
Oh,
Um,
for sure.
and to understand really what you're doing there, and you start seeing things, and it's like there's these lines going down the screen this way and going this way, and you've got like 30, 60, 90, and then you see like 10,000, 100,000, 1 million. What does all this stuff mean? And I always default to my wife for our health insurance because it's through her work, and
Hmm.
I just, I'm like, how much and roughly what are we getting covered? Okay, sounds good. Because
Yep.
it's one of those things where it just drives me crazy to try and figure it out, and
It's a different
I,
language.
and I know for a fact I don't want too little, you know.
Yep.
I just know that not a rare, I'm in a different boat. I don't normally drive people in my car for my work, but
Hmm.
I do have to have the coverage for it. So I already had excessive, compared to a normal person, excessive coverages. So,
Hmm.
from my own auto insurance policy, this reform did very little for me because I was already far and away above, these coverage options.
Hmm.
And I can't legally, I can't go to the zeros or the minimums, anyway,
Yep.
I'm above, like my liability is like 1 million, 5 million, it's things like that. Uh, and um, it's like I had the conversation, but as it turned out, it really didn't matter to me. um, but I wanted to know because I just like to know, right?
Absolutely.
And certainly our conversation tonight was really for like the educational purposes of insurance and all the ins and the outs and why it's to me it's so important to have a quality agent on the other side of things. And I think that it's
Hmm.
important. I'm a very relationship driven person. Um, and so it's not like I canceled my life insurance policy with somebody else or anything like that. Just came into a new relationship, was looking for a new policy, got the new policy. I haven't asked you, you haven't asked me for my homeowner's insurance, for my auto insurance, or anything else. We've served the purpose. And, one person might say, well, he's not a good salesperson then, he should ask for all his business. But me, I would say,
And
well,
maybe I will. Maybe I will. Thank you for the invitation.
yeah, October, put it on your calendar.
Siri, remind me October. What date is it? No, I'm
I
kidding.
don't know. And so, but that's what's important, right? And so that I could keep relationships that I have
Yep.
and policies that I have and that I'm comfortable with and things like that, but that I have my resources and that everybody has access to resources. You don't have to just rely on, and there's nothing wrong with relying on the agent from, wherever, Progressive and Geico and State
Hmm.
Farm. Those people
Yep.
are all fine too, just as long as that person really breaks down what you have, why they suggest it for you, and maybe your benefits of having something different. So
Yep.
that's really what it comes
I
down to, you know.
You hit the nail on the head. I do plenty of pro bono consulting, right? People who refer friends just ask a couple questions in general, and I'm more than happy to answer it. And probably like you know that you do enough good by enough people and enough opportunities that come your way or enough referrals. I don't need to try to write every single policy for every single person I touch or meet on the street. That's exhausting for everybody. But my hope is that whether I sit down with someone just being a free consultant or sit down with someone to review their policies or write policies, it's let's walk through this right now. You don't need to know everything that I know, but I want you to know that you are covered in a very comfortable way in every possible scenario. And the joke is that as soon as they get to the car, they're going to forget what did I say with personal injury protection or bodily injury or underinsured. But what they should know is I can sleep well at night. And when I see Andrew at church or I see Andrew at Meyer, we're not going to avoid each other, right? I love and live in this community, and I won't shy away and be like, oh man, that person has a crud policy. I hope he never gets in an accident or has a home issue. But the point is that you know that you're in good hands, you know that you have good coverage, and that's all you need to know. And then, heaven forbid, a claim calls it comes in, and trust me, I've gotten those calls at the wee hours of the night. I don't have the policy coverages for yours memorized, but what I know is, hey, Joe, remember when we sat down and we talked this through and we talked about assets, we talked about what's important, we talked about protections, and we both agreed that this met those needs. So I know enough, right? You know enough, I know enough. Now, post claim, let's dive into the details. But I've never been surprised after a claim. A client's never been surprised after a claim. I think that peace of mind is what everyone seeks. But you're right. There's a lot of language in there that a lot of people don't understand. But you know, I don't need to understand everything in every other industry. I need to, like you said, rely on experts, people that I trust, that I like, that I know have my back, and maybe do a review here and there.
Yep. All right. So this has been like super in depth, right?
Draining? Oh, in
Oh,
depth, yes.
well, there. I'm guessing that there's some people that are like tuned in, like, wow, I'm so glad to learn. There's other people that go like, what are they talking about? I'm
Yeah.
out, right? So I'll try to end it maybe with something kind of fun. Your last name is Co,
Yep.
and obviously spelled CEO. And I told you, and so I got this email. So we didn't know each other, right? And a friend said, "Hey, you got to talk to my guy Andrew," and blah blah blah. And so I think I left a message, and I said it's easy to email me, text me, call me, but email and text are probably like the best because of my variable schedule. So you shot me an email, and then I see like this really arrogant guy that sends me an email that says he's the CEO, and and then as I'm looking through, I'm like, no, I guess that's his last name. Where's that last name come from? And
Absolutely.
and growing up with attendance, I can't imagine anyone ever got that name proper. Any teacher.
I've heard every pronunciation possible. Um, it's good because people remember it, and it's bad because people remember it. It definitely makes checking my junk mail, pretty easy. The snail mail, if it's capitalized or it's read as an acronym, I can just tear it right up. But
Yep.
so it was originally CEA, CEA, and I don't know, 4 or 5 generations ago, my Italian, great something or another came across through Ellis Island, and it, like many last names, got changed. And the story goes that he couldn't speak English, and it looked like CEO, and he just wanted to get on that side of the border, right?
Right.
And so it went from CEA, pronounced Chea, to CEO, pronounced CO, and it's been like that for generations now. So, yep,
There we go.
that's it.
Yeah.
Short and
Well,
sweet.
anytime I see someone with a somewhat unique last name, it certainly resonates with me. With
Absolutely.
Muck, and
I
and with
love your boots, man. I love them.
yeah, no, it's funny. Is like I saw those and I was like, dang, did I miss something here? Um, and also, is it Lowe's or somebody? Somewhere I went and they go, "What's your phone number? We have a lot of Joe Mucks in here," and I'm like, "You do." Like you have a lot of
Interesting.
Joe Mucks, like or Joseph Muck, I don't know, one of the two. I'm like, really? You have a lot of Mucks? Like it's certainly not a name you come across a lot.
Yep.
Similarly, I think it was either Moch or Mooch, and they changed the spelling and stuff like that when they crossed into the country, and
Hmm.
and it is what it is, right? It's Joe Muck. So
Exactly. They all get chopped up or changed at some point.
yeah. So before a final going away cheers and everything like that, obviously I appreciate that you elaborated so much on insurance. Um,
Yeah.
how might somebody reach you? And then what else? Is there anything you want to say going away?
Yeah. So I'll give out my cell phone number, which I have no problem doing, which is 734-260-2818. That's probably a good way to reach me, either via text or call. Yeah, we do home, auto, commercial, life. So kind of the whole spectrum there. And as I alluded to earlier, even if they're general questions, I don't need to write every single person's policy or demand that I quote it. I'm a pretty easygoing guy, and I do believe that enough goodwill put out there, it all comes back around. So I don't think anyone has to feel pressure if they do want to call or text, and I'd be happy to answer whatever questions I can. And I do appreciate you having me on. This has been fun, and maybe we'll put one on the calendar for later in the year too, Joe.
Yeah, for sure. And we can have a little more lighthearted conversation than so much in depth.
I
But
like it. Hopefully, we can talk about college football, though I won't hold my breath or my beer on that.
well, I just hope that if we are talking about it, that it's talking about how bad your team is and how good my team is. So
Hey, I'd be happy to watch my team lose if it means they're playing. I grew up anyway. Yeah, I grew up in the John L. Smith, Bobby William era. I'm used to losing. Okay, D'Antonio was after me. God bless the man, but that was after my era, so I'm used to losing. So it's okay.
fair enough. Andrew, I don't know if you have left. I always save a little bit, so I got a little.
Oh,
Cheers to you, my friend. Thanks a lot.
I'll see how good of an actor I am.
All right. Have a great one, man.
Hey, appreciate it, Joe. Talk to you.